Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Good afternoon, Vivek. Looks like markets have decided they don't want to do anything today. They just want to chill and rest. Markets are absolutely where they were in the morning. We did see a further dip, but that has been bought into as well. 26 points lower in the Nifty, Bank Nifty doing well, but a bigger cut that we are seeing on the mid-caps today.
Mid-cap, small-caps taking it on the chin, and a little bit of correction was warranted given the fact that, you saw the magic figure of 26,000 actually being hit in the session. So some profit booking from the higher levels, but quite a lot lined up on the show. Let's start off with the top headlines. Mid-cap see profit taking even as frontline stocks stay ranged. Power sector plays and financials see some green even as most others drag. The 10-year bond yield touches fresh 32-month low on rising hopes of a dovish RBI in the October policy.
Piramal Pharma gains after bullish guidance at its analyst meet. Shares rise after the company says it has ambitions of being a global pharma company by 2030. Management tells CNBC-TV18 they are eyeing $2 billion in revenues and 30% EBITDA margins by 2030.
Ease My Trip corrects nearly 14% after a big block deal sees over 8% equity change hands at 38 rupees a share. Promoter Prashant Pitti is likely to have sold around 8.5% stake.
Dabur corrects almost 5% after UBS strikes a cautious note. The brokerage downgrades the stock to neutral, saying rising cola drink competition is likely to impact carbonated soft drink players and end up in a possible price war.
IEX falls for the second day as the street digests potential impact of market coupling on the stock. Elara Cap and IIFL are bearish, saying market coupling can lead to market share loss to 70% by FY27 from 84% currently.
Okay, so it stays status quo. We are not seeing much moves on the Nifty right now. 28 points lower there. Mid-caps are the one which have been under a bit of pressure. So that's where we are talking about a 400 or a 500 point cut actually right now. Yes, the dip did get bought into on the Nifty, but we are still in the red. And consolidation is something which is expected as well after that stellar rally that we have seen on the Nifty as well. 26,000 yesterday. We are off by around 100 points from those levels right now. The media pack is doing well. We have the realty pack, which has made a comeback yet again. CPSE stocks, yesterday that sector was doing well. Today, again, that's the case. Metals, a big mover yesterday. Today, it has added on to those gains. Not in a big way, but yes, it is in the green in a market like this. But we do have big losers in terms of the IT space. FMCG is lagging today. So a lot of moving parts, but on the headline index, it's very quiet.
That's right. You mentioned a very interesting point, about the CPSE index. So today, post-market, most likely you will see a rebalance come out in terms of weight increases and decreases. And a lot of the CPSE stocks are the stocks which are part of the PSE indices will be in focus. A couple of names, that have a significant weighting there include Power Grid as well as NTPC. And both of the stocks are quite active in the session. Of course, power stocks also in focus on the back of the fact that the National Electricity Plan has now been finalized. But this is our special segment, Mid-Cap Movers. Hormaz is standing at the wall to take us to the mid-caps that are moving around in the session.
Well, the Nifty may not be wanting to do anything today, but the broader markets definitely are, and on the downside in today's trading session. And there are plenty of movers and stock-specific activity that is ongoing today. I'd like to start off with IEX. Of course, can't not talk about it. Down yesterday, extending those losses in today's session, 4.5% lower today as well. Mind you, the stock has entered the F&O ban today, so no new positions there. PB Fintech continues to see some profit booking. Down yesterday, down today as well, 5.5% lower. Oracle Financial out of the ban today, 4% down, and Indus Towers continues to feel the overhang from Vodafone Idea. PSU Banks, it was a case of a rally short-lived, I guess. Last week, one of the top performers, and now seeing some bit of profit booking yesterday and today as well. All constituents of the PSU Bank Index trading with losses in today's trading session. Some stocks that have done well and some have not done well on the back of their respective news flows. Easy Trip after the block deal at one point was down 20%. Dabur after the downgrade. Delta Corp after the demerger that it announced was up 9% at one point, still holding on to 4% gains. And Z Entertainment also trading with gains of around 3.5%. And lastly, stocks that are doing well on the back of volumes. And eClerx is the one, while Midcap IT is selling off in today's session, eClerx is sort of bucking the trend, 10% higher now. HEG and Graphite India both are doing well. 5-star at the highest point of the day now, 7.5% higher. And as is Tata Communications, 4.5% higher on very strong volumes. Back to you guys.
Well, Hormaz, the frontline indices are not doing much, but I hope you have some special plans for the evening. Otherwise, it would be a day without much plans for the frontline indices and yourself as well. But a lot of moving parts in the market. So thank you so much for joining in with all those details as always. Well, with that, let's now welcome Vinay Rajni, Senior Tech and Derivative Analyst at HDFC Securities for a technical check on the markets. Vinay, good afternoon. Thank you so much for joining in. Well, do you think consolidation will continue for a bit before we see bigger moves, maybe on the upside or downside?
Yeah, good afternoon and thanks for having me on the show. So as we have been discussing, this mid-cap and small-cap indices have done nothing for last 1 month. If we were to look at the chart, small-cap index has given zero return in last 1 month. For last 4 consecutive weeks, that index has been consolidating. As far as mid-cap index is concerned, today it is down by 0.8%. So breadth is definitely negative. 3:5 advanced decline ratio is there. So as we can see, strength in the large cap stocks and the kind of data which is FI is posting nowadays, the total focus has shifted from mid cap, small cap to the large cap space. So the strength is there in the large cap space. Mid caps and small caps are into purely consolidation. They are down but not out, we can say. So this consolidation may continue for a while, but overall trend of the market is bullish. Nifty and Bank Nifty can do well and can outperform the small cap, mid cap further from here. So definitely overall market looks strong today because just consolidation is going on in overall uptrend. But one can concentrate more on the large cap stocks and the benchmark indices like Nifty and Bank Nifty rather than looking for mid cap and small cap trading opportunities. So yes, overall market is bullish and intraday dip should be bought into, and especially I'm bullish on the large cap space. And some of the sectors which are doing very well are realty, metal, and some of the financial stocks. So these are these sectors one can look at for trading long sell.
Vinay, you mentioned the sectors that you like. Which are the individual stocks that you're recommending today?
Yeah, so as I said, that realty index is looking very strong. It has been very resilient in last 2 trading sessions, and the rate sensitive sectors have started performing in this market. So I feel that along with the DLF and Godrej property, the stock like Oberoi Realty looks very strong on the charts, and nice pattern can be seen on the short to medium term chart. So Oberoi Realty can be traded long around 1920. For traders, I would suggest a stop loss at 1875. On the upside, I see a target of 2000 in 1 to 2 trading session. So Oberoi Realty I like a lot on the charts. The second pick I would take it from the metal space. So Hindustan Copper is one of the stock which I like on the chart. With so entire metal index yesterday broke out, and today it's just showing muted activity or just consolidation is there from the higher level. But overall trend I think seems to have reversed on the upside, and this may continue. So if we were to take the next 1 or 2 weeks view, then metal can really do well from here. So Hindustan Copper is the stock which is there on my radar, which is trading at 341. For traders, I am suggesting a stop loss at 332. On the upside, I am expecting a target of 355. So metal and realty space looks very strong, and from realty I will choose Oberoi Realty, and from metal I will take Hindustan Copper on the long side.
Okay, so realty space, that is doing well. Thank you, Vinay, for joining us. So from the realty space, we also have Godrej Properties, which is surging in trade. It's up around 5% right now, above that 3,300 mark on Godrej Properties. The other one is Max Estates. We have Mahindra Life Spaces, which is doing really well, 4% higher, that one. If we talk about Godrej Properties, this week itself, the stock is up around 12%, so big moves there. And it's one of the largest players in the realty space as well. And if we talk about the other names which are doing well right now, Nelco is one of them. That stock is high by 4%. So some of these movers in the broader markets I thought we should highlight as well. Let's do one thing. We'll slip into a short break now. When we come back, we'll get to you more on the markets, focus on SpiceJet and Piramal Pharma, big movers of the day. Stay tuned.
Welcome back to Midcap Radar. Well, the company in focus is SpiceJet after it concluded its 3,000 crore fundraise via QIP route. My colleague Nigel spoke to Ajay Singh, the chairman and MD of the company, and asked him specifically about the long-pending issue of the company's dues towards airport and, more importantly, its employees. Listen in.
Outstanding dues at airports are quite minimal, Nigel. and those are being settled as well through this fundraise, but they are actually quite small. SpiceJet has been on cash and carry for a period of time at key airports, and I think while that's tough when that happens to you, one of the advantages of cash and carry is that you carry very little debt from that on your books. Same case for ATF payments. We've been on cash and carry. We've chosen actually to remain on cash and carry for the last 7 or 8 years. And what happens with that is that we are constantly paying for the fuel that we put, and therefore no amounts are due to oil companies at all.
So no amounts due to airports as well as to oil companies. Are we getting that correct?
Very, very small amounts. Very, very small amounts due. And those will be, I think, settled very easily. I mean, those are like what I think the total of amounts due to all airports combined will probably be under 100 crores.
Well, we've addressed the shareholder concerns, the lender concerns, but I wanted to ask you, what about the employee concerns? And there are 3 aspects out there: outstanding salaries, the PF that is outstanding, which hasn't been deposited in its rightful place, as well as the TDS that's been cut, and that as well hasn't been deposited in its rightful place. By when can we see all these 3 addressed?
Well, you will see all these issues being addressed over the next 2 to 3 weeks. We are in discussions with the authorities to ensure that we have the calculations right and that we can make these payments almost immediately as we settle these numbers. So, I think we've already committed to the investors that out of the funds that we receive from them, statutory liabilities and employee dues will all be cleared, and this will be done.
So by the end of this calendar year, all the employee dues, the PF dues, as well as the TDS that was cut will be deposited in its rightful place. Is that correct, Mr. Singh, in 2024 itself?
Absolutely. That's absolutely correct.
That's SpiceJet. The stock is down by 5% in focus on the back of a fundraise. Piramal Pharma, that's the other one on our radar, aims to be a $2 billion global pharma health and wellness company by 2030. Nandini Piramal, the chairperson of the company, tells CNBC-TV18 that 25% is a sustainable rate for margins, also guides for mid-teens growth for FY25. Listen in to what she had to say.
One of the things we wanted to do was say, what do we want to be by 2030? And as you rightly said, we want to be a $2 billion company. But one of the other things we also want to do is increase our EBITDA to 25%, which means a tripling of EBITDA. And in the meantime, we also want to reduce our debt to EBITDA ratio to 1, less than 1. So the way we plan to do that is our 3 businesses, we believe that there are secular and macro tailwinds that will help us. In the contract manufacturing business, we want to focus on innovative work. We do think 25% is sustainable, and the way we want to do it is primarily by doing operating leverage. As we increase utilization at our sites in the CDMO business, we expect that operating leverage will flow through to EBITDA. As we actually do higher quality revenue, whether it's the innovation or the differentiated offerings, those margins are higher, and we expect to see that benefit as well. We are also continuing our focus on operational excellence and cost and procurement, and we'll continue to manage that. I think overall, we're still saying for the year, we want to keep early teens, actually mid-teens growth, and improvement in EBITDA and a significant improvement in PAT this year. So I think we're going to stick with that at the moment.
One of the other stocks that's actually seeing quite a bit of selling pressure is actually Dabur. UBS has gone ahead and downgraded the stock. Winnie standing by with details on that particular note.
Yes, sir. UBS has downgraded Dabur, and this is to a neutral rating, target price of 700 rupees per share. Now, the 3 important reasons that they've highlighted why they believe that Dabur may not do well going forward. One, the potential sales risk that is coming in for real juice, which accounts for around 9 to 10% of their revenue as of FY24, because of the competition that is increasing in cola drinks, especially after Reliance came out with Campa Cola, relaunched it at a lesser price. So, a bit of a pricing competition or a pricing war is what one one could watch out for, and that could in turn impact Real Juice and the business of the company in that front. Other than that, there is also increasing competition in coconut oil. We've seen recent launches even coming in from Bajaj Consumer on that front. Coconut oil accounts to around 2 to 3% of the consolidated revenue. So yes, impact on that front. These two are the sectors that are actually segments for the company that could be facing some bit of a rising competition. Other than that, valuation also is quite high when you compare it with the peers as well. FMCG is trading at a much higher premium, and Dabur too. So yes, rural recovery, that's in place. Long-term story is in place, but near-term, maybe some bit of a pressure is what we could be watching out for.
Okay, yes, that can be seen on the stock as well, down 5%. Thank you, Winnie, for joining us with all those details. But let's move on. In a significant move, the Reserve Bank of India has lifted the restrictions placed on IIFL Finance's gold loan business. These restrictions imposed on in March this year prevented the company from sanctioning, disbursing or selling its gold loans. Earlier today, we caught up with Nirmal Jain, the founder and chairman of IIFL Group, to discuss more on this development. Listen in.
I think we remain focused on the customer. We aren't really very concerned about how the book will ramp up, because the short-term product rotates much faster. Whatever feedback I'm getting from customers, employees, people on the ground, there's a positive momentum. Customers basically like us, and at the earliest opportunity, they'll shift their business back to us. So as far as housing finance, microfinance are concerned, they're independently managed and also funded separately. And I don't think there should be any challenge in getting the growth back in those businesses subject to industry conditions as such. And in these MSMEs, we do both secured as well as unsecured loan. And typical loan size is less than 10 lakh rupees, or it can be up to 30 lakh rupees, but the average will be less than 10. This is a segment where we have a natural advantage because we have a network of branches. As a group, 4,500 branches. Gold loan alone has 2,700 branches. We have people on the ground. These branches are located in the clusters where these kind of MSME enterprises, typically retail shops or traders, these kind of businessmen, they're around the shops. Many of them have been our customers for gold loan. So we see this as a significant synergistic business to expand and diversify our longer term.
All right, that's the word coming in from IIFL Finance. That's a CNBC-TV18 exclusive as well. Keep getting excerpts of that conversation. The stock is lower today, but of course, after that initial news, there was a pop on the higher side. Let's slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Well, the entire power sector is in focus today as the Ministry of Power went ahead and finalized the National Electricity Plan for central and state transmission systems. The government plans to meet peak demand of almost 458 gigawatt by 2032. Let's do a deep dive into what exactly is the Ministry of Power saying and what is there in the plan between 2023 to 2032. Number one, the NEP or the National Electricity Plan, as we mentioned, is aimed at meeting a peak demand of close to 458 gigawatt. The earlier NEP, remember, was from 2017 to 2022. The total cost outlay for this particular plan is quite significant at rupees 9.15 lakh crore, and that indicates the kind of opportunity size you will be seeing across the entire power value chain. Now, key targets: number one, to meet the increasing electricity demand; number two, to facilitate renewable energy integration and green hydrogen loads into the grid. What are the new plan targets? Number one, 17,700 circuit kilometer lines and 73 GVA transformation capacity were added annually last time around. So this time around, they want to increase the network capacity from 4.85 circuit kilometers to 6.48 circuit kilometers in 2032. Transformation capacity is aimed at almost doubling by 2032. Now, who are the key beneficiaries of such a move? The obvious answer, number one, is that if there is going to be significant transmission capex outlay, one of the key beneficiaries, of course, is Power Grid. But the value chain also benefits. So look at names like Hitachi, GE, T&D, Siemens, Skipper, KEC. These are all of the companies, and even cable makers like KEI Industries and APAR Industries too stand to benefit from the kind of opportunity size. In fact, today, Goldman Sachs has written a report on this particular development. They believe the NEP is positive and significant positive as far as asset developers like Power Grid is concerned. They believe Power Grid can potentially capture bulk of the upcoming transmission capex opportunity. Remember, they say Power Grid is backed by large balance sheet and also access to significantly lower cost of debt. Now, this particular development is quite a significant development as far as the entire power value chain is concerned. No wonder then Power Grid today doing quite well, and the stock has been on a tear in recent times. But it's all the time we have on this edition of Midcap Radar, a lackluster trading session. Your stocks when we return.